Welcome to the Startup Grind.
I'm excited that all of you are here today. It's absolutely cold, but when it comes to making money, the cold doesn't stop us, right? So I wanted to share a little bit about Startup Grind. We actually, for those of you that have been coming every single month, it's been an absolute privilege and an honor to come to these events. I always say that it's one of probably the best networking-based event in Buffalo. Why? Because we have top-notch speakers. We have obviously the kind of service you get, a lot of positive-minded people who are also serious entrepreneurs, and we all want to connect with serious entrepreneurs because we're serious and we're trying to grow. So that's really exciting about Startup Grind. So I just want to share, this is a team that has been working on taking Startup Grind to the next level. And so be sure to look forward to a lot of great things that are going to take place this year, as far as the speaker, as far as the way we're doing Startup Grind, and as far as how you'll be connected to the vision of Startup Grind and your own personal vision as entrepreneurs. And so we do have a number of sponsors today. And by the way, I forgot to introduce myself. My name is Nyandusi Nyachai, also known as Deuce or Coach Deuce. And so we have a number of sponsors. Colligan Law is a law firm. I want to thank them. We want to thank Dig, and I think it's for Dig. For those that are entrepreneurs, for those that are here today, I think it's they got a free on your seats. Okay, yeah. So you've got a free pass to be part of or to engage with the Dig as far as your startup and enjoying the resources that they have here. With regards to startups. As well, we also have Hodgson Russ is also a law firm that has sponsored us. And then we have Launch New York that is always participating together with Startup Grind. And their goal is to help companies grow at a fast pace. And so they have resources that enable entrepreneurs to do that. They do a lot of mentoring. And so you want to connect with just the vision of Launch New York. Martin Davidson, public relations firm, also very well connected with Startup Grind. You see them show up very frequently. Also Nickel City Graphics, and a video marketing firm that has been such a great support to Startup Grind. And then we also have Startup Weekend Buffalo, where a lot of entrepreneurs come together in one weekend and start their businesses within 48 hours. So it's a lot of positive energy, and not just positive energy, but a lot of great things taking place in the city of Buffalo for entrepreneurs. So last but not least, we have what's called the New Orleans Pitch Contest. Here's why this particular slide is very important. There are three business owners or three companies that have been selected to be part of the pitch contest in New Orleans. And so they're entrepreneurs from Buffalo, Charleston, Nashville, Pittsburgh, Raleigh, and San Antonio. And we have obviously three entrepreneurs that are going to be pitching all the way in New Orleans. The beautiful thing is there will be a pitch practice contest here in Buffalo. And so this will be an opportunity for those three companies to pitch themselves in preparation for New Orleans. And they will get the pleasure of you giving them feedback. So as they go and represent themselves and hopefully win and represent this city, they will know what to look for as well in terms of becoming great for the pitch contest. And so the date is not. We don't have an exact date for the pitch practice, but if you just look out in your emails, we will be having the date probably the end of March. So I want to go ahead now and introduce the gentleman that will be hosting this event. Personal friend of mine. I love his ability to serve others, and this is who he is on a daily basis. He's a man who is not afraid to put others before him, and he's a man who's helped this Startup Grind event be able to go and be consistent up until this point. It's none other than my friend, Mr. Evan Piazza. Thank you.
Thank you, Deuce. So I did not pay him to say that about me. And I asked him to do the intro 2 minutes before he got here. So you did a great job. Thank you, Deuce. Thank you all again for coming. I'm really excited about this event. I've been meaning to get Kevin on stage for a while now. Kevin is the founder of Richmond Capital Partners, which you're going to hear a lot more about, but they're involved in wealth creation, advising startups, financing startups, financing real estate, and a lot more. And Kevin is also a pilot, so that might come up in conversation as well. So let's all make some noise and bring Kevin up to the stage. So the first test. And the first test failed.
Failed already.
Louder. Hello? Works for me.
1, 2. Okay.
Let's start over then. So thank you for coming. Let's start with Richmond Capital Partners. Briefly describe what you do and how Richmond Capital Partners was started.
Sure. So I guess I've been an entrepreneur my entire life. And this really goes back to when I was really young. When I was 5 or 6 years old, I had a lumber mill. And of course, it wasn't a real lumber mill, but I imagined that I owned a lumber mill. I had this little yellow pedal car. We lived on a corner block. And I would take the yellow pedal car from our side porch and pedal around and go to the front porch, and that was my office. And I came home one day, I was like 5 or 6 years old, and I sat down to dinner. My dad says, "So how was work today?" I said, "Well, it wasn't so good. I think I'm gonna need you to come help me out." And he says, "Oh, okay, I'll come help you out. What's the problem?" I said, "Well, the union went on strike because I wouldn't pay him more." And my dad is like, how does this 6-year-old kid even know what a union is? But so my first issue with labor relations was at 6 years old. And I had a lot of businesses, real businesses, when I was younger. I lived in Jamestown, and we have the Lucy Desi Days and Lucille Ball Festival and things like that. And my house was actually on the street of the house where Lucy was born. So when they had these festivals, the big tour buses would drive down our block. And I would set up a lemonade stand right in front of this house, and the bus drivers were very accommodating. They would stop, all the people would get off the bus and buy lemonade from me and get back onto the bus. So, that was the first real business. Then I went on to, I started flying gliders when I was younger, 14, and this was just when GPSs were coming into aviation in a big way. And they went from, in glider racing, used to photograph the turn points to prove that you'd been there. And they started using GPS loggers, and you just fly over the turn point and log everywhere you went. And a lot of older guys just couldn't figure this stuff out. So I started a business, and you could call me up, and I charged you like $10 an hour. I didn't really know how much I was worth back then. And on the phone, I'd walk you through how to set all this stuff up and how to use it. Figured out there was a little bit of a market for this, so I started going to the glider races themselves. Like 2 days before, if somebody couldn't figure out how to make it work or how to get the turn points in there, I'd be like, okay, I'll do it for you, it's gonna be $50. And then a day before, I started to realize, man, people really want you to do this, so I started charging more as it got closer to the beginning of the contest. So I started charging $100. There would always be the one guy who was like, oh, I don't need any help, I'm gonna make this work. And it's like 10 minutes before he needs to take off for the first race, and he can't get the thing to work. I'm like, that's gonna be $250. And they're like, but you just told me 2 days ago it was 50. And I'm like, yeah, but that was 2 days ago, right? So I feel like Travis Kalsonick from Uber stole my idea with his surge pricing model, because I had the original surge pricing model. But those were the things I did when I was younger. And then while I was still in college and a little bit after college, I did some oil and gas banking work. And at the time, most of the natural gas being imported into the US came from Trinidad and Tobago, down in the Caribbean. They had a ton of gas and no use for it. So they would liquefy it, and they would ship it over to the US and regasify it at terminals down on the southern coast. And so I learned the natural gas business. And didn't want to really move to New York. Didn't really know what I wanted to do. Knew I wanted to be in business. I graduated from college in 3 years. So I'm just like, I'm gonna go to Buffalo. My friends are in college there. I can party every night and live on people's couches, and it'll be great. And it was awesome. And then I ended up getting a job up here in asset management, and this was late 2007. So in late 2008, you start hearing about this Marcellus shale thing. And, people are talking about it, there's a lot of natural gas, and I said, I kind of know something about this, maybe I can figure out more about what's going on. And was able to network into some things, help some people with some businesses down there. Things obviously went very well for a lot of people. And after some of my clients sold their businesses, they actually hired me as I run what I call a family office. I'm basically a full-time CFO for wealthy families. And it's pretty incredible. You think being wealthy would be easy, but being wealthy is like super hard. There is like a ton of stuff that you don't think about after you sell your business and you have all this cash. There's actually a lot of work that goes into it in managing all of this and bringing it together. So, if you have a big business and you're about to sell it and you think that, life is going to be an easy street from here on in, I hate to burst your bubble, but it's a lot more difficult than you might imagine. So that's kind of how I got to where I am. I guess in reality, I've just been really lucky. I've been in the right place at the right time, more times than anybody really has a right to be in an entire lifetime, I think. I almost got hired at Bear Stearns in 2006 before I did oil and gas banking. That would have been a very, very, very bad thing. So sometimes, you're like disappointed and, I thought it was terrible. I just couldn't understand how they didn't hire me. I'd memorized how to price complex derivatives, IOs, POs, all this stuff. And it turns out that was the best thing that ever happened to me. So thank you, jerk managing director at Bear Stearns, who didn't like me.
So part of what you do at Richmond Capital Partners, and correct me if I'm wrong, is advise these high wealth individuals on startups that they should invest in. So you talk about why people should invest in startups, or that process of looking for startups to invest in.
So for me, startups are a disproportionately small amount of capital that take up a disproportionately large amount of my time. If I didn't really like doing this, it would be awful, because the things that you deal with in startups are 10 times worse than anything you deal with anywhere else. But it's a lot of fun for me, because I built all these businesses and loved building businesses. This is kind of extending it in a way, and working with emerging startup companies that's exciting. Why invest in it? Well, the statistics from the Angel Capital Association say that a well-managed or professionally managed angel investment portfolio returns 21% annually. How they define well-managed or professionally managed, I don't know how they select the professional managers or anything, but it's not, being a doctor and going to a pitch and writing a check at the pitch. You gotta call up people, you gotta ask questions about the business, you have to figure out who their competitors are, what's the market niche. You've got to put a little bit of effort into it. At some degree, you're kind of just throwing money out there and hoping for the best in the angel world, but one or two really good investments out of 10 can, return several multiples of your invested capital. So for me, it is a good investment opportunity. I'm never going to get rich off of doing it, but it's a lot of fun. I enjoy the process, and it's also a way to give back for me, because, doing this, especially in Buffalo, where the ecosystem is not so developed, there's a lot of people that really don't know where to necessarily get started, and they have great ideas, but they need people around them to help them execute on those ideas. And there's very few people willing to sort of take the lead and say, okay, I believe in your idea, I'm going to get a term sheet put together for you, I'm going to help you finalize your presentation, I'm going to help you get in front of investors. And that takes a lot of work, but it's an enjoyable process, and I hope it's somewhat self-serving too, because I hope some of these people get really rich and they remember me and come back and hire me for their family office services. So that would be really good too.
Can you talk about some of the things that you've seen work well for the Buffalo startups that you've advised? Some of the, you described the process of somebody having an idea, not knowing where to go, or what's the first step or what's the next step. In your experience, what is a good first step for a startup person? I have an idea.
So in Silicon Valley, you can go give a slide deck to a venture capitalist with some pictures on it, and you can get a $40 million check. I hate to break it to you, that is not going to happen in Buffalo. You sort of have to have something that is a viable product that works, that people can touch, see, feel, whatever, and seems to have some traction. And if you have that, it's pretty easy to get in front of people here. There's the Venture Capital Association, Buffalo Angels, events like this. Go network, introduce yourself to people, they like it, and that can help you, get started in raising capital. A lot of people, I keep hearing this crap about there's not enough capital in Buffalo. I have yet to see a deal that I thought should get funded, not get funded. So the real issue is the people that say that sort of stuff probably don't have a very good idea. But if you have a good idea and you get to a point where you have a financeable company, I think that you'll get funded if you work hard enough.
Could you maybe elaborate on what, in your opinion, is financeable? Do you have to have paying customers? You mentioned prototype, but how, Buffalo being a mid-market city, how can you most effectively leverage your time and whatever limited resources you have to scale up quickly as a startup?
So I sort of like the word scale up quickly, because that allows me to tell you easily what will not get funded. If you are the next Evan Spiegel, who has an app where 1 million 14-year-old girls are going to take pictures of themselves that disappear, I can guarantee you that you will not get funded in Buffalo. I don't get those businesses. I don't know anybody that gets those businesses in Buffalo. You need like $1 bajillion to spend $300 to get someone to send one picture of themselves. I mean, it's really, when you look at the economic models of these businesses that are raising this kind of money, we can talk about that later. I just don't get it. I don't understand. Products in Buffalo that are good are something that has a good real world application and where you can see a revenue model in the near future. I like to tell people, all right, you just got this $1 million check, run your business like this is the last dollar you were ever gonna get. Because any sort of business around here that you need like $10 million to acquire all these users, it's just probably not viable for the Buffalo financing ecosystem. You need to have something where you're gonna generate some revenue on a pretty short-term basis. I think ACV auctions is a great example of this, which I actually passed on ACV, and I look really stupid now. And I passed on it for the reasons I just talked about, that I'm like, oh, it's a network effect business, you gotta get a ton of people on this, they'll never raise the money in Buffalo, blah, 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 blah. But what I missed on it was, wait a minute, they get paid like $300 to $500 every time that they sell a car. So you don't have to sell a ton of cars to have a viable business that you can grow slowly and organically. I just talked to Dan on the way in. He says that they've sold like 1,500 cars, so it's like $400,000 or $500,000 of revenue that they've done in their first year. Like, that is really good. So I don't know if Dan is here, but if you guys do another round, please call me.
So Dan is actually going to be our speaker next month, so there's a little teaser for you. ACV
Can I
auction.
ask him the question after the talk and publicly shame him for not letting me in?
So on the, you deal with a lot of maybe first-time founders, first-time entrepreneurs, or first-time growing this large startup business. What is something that you've seen startup founders doing too much of and doing not enough of?
So unfortunately, raising money is like a terrible, awful process. I mean, it's like going to the dentist and having your molars pulled while fully awake without any anesthesia is the best way I can describe it. And they try to get too like into the weeds and the details on all this stuff. So what you really want to do is find somebody like me, and there's a lot of people like me out there that's gonna like manage that process for you and be like, okay, when it's done, I'll let you know and go run your business. I guess that's the best advice I can give on that one. I think all founders are different. They're all kind of crazy in their own way. I mean, they have an idea and they're gonna start a business and like, you know, eat ramen noodles for a couple months. And, you know, Oscar from Thimble is like a great example of this. I love that kid. They just raised $300,000 on Kickstarter. I don't know if you guys saw that. And his old startup, which is sort of morphed into Thimble, Gradfly, ran out of money like a year ago, and he like lived on his friend's couch and ate ramen noodles for 9 months while he was getting Thimble off the ground. So like that's pretty incredible. And they started having like the really good Kickstarter success, and they had no money. And I was talking to Oscar, and I'm like, all right, like I'll just write you a check like today, and we'll figure this out later. So I gave him a check for 25 grand, and Oscar isn't here, but if somebody sees him, would you let him know I'm still looking for the legal documents? I have no idea if I actually own anything.
I don't think he went to Vegas with it, but maybe. What do you do when somebody says no? You know, especially in Buffalo, where you said that investment ecosystem might not be there. How can you proceed if an investor says no, and you're, especially in Buffalo, when you only have a limited number of phone calls that you can make to investors?
So you're very polite. You say, I'll follow up with you. And every 2 weeks, 3 weeks, you should be creating some sort of like weekly, bi-weekly report that you're sending out to your board, your investors, whatever. Condense that down into here's key facts about why my business is succeeding, and hit them like every 2 weeks. And if you show them, here's what I showed you on a presentation 4 months ago, and look, I've accomplished 80% of that, that gives you a lot of credibility that you're not putting BS onto a piece of paper, that it's a legitimate idea, it's a legitimate revenue model, and people will appreciate that, and they will come back to you. So, Dan Penberthy and Pete Grummet Rand are famous for saying no like 18 times before they say yes. So you just have to, stay in contact. And that might be some of the best things that happen to your business, because a lot of times I've seen people get funded and go this way only to realize like 6 months later, after they've spent a lot of money, that that's wrong. When you don't have the money to spend for the first 6 months, you may actually go this way and figure out something better while you're still trying to figure it out before you go and hire like a bajillion people and everything else.
So say I have a startup and I follow the process, I have a revenue model, I have a product, I'm following up with investors, and I receive an investment, I'm set. What advice would you give to entrepreneurs who do receive capital, especially in Buffalo? What should they do next?
Yeah, you just need to treat every dollar like it's your last. I mean, you may not get funded again. You see people get a check and they go hire like 9 people, and then those 9 people are sitting around on their hands with like nothing to do and no idea what they're supposed to be doing. Get a check, go slow, hire a couple people, figure out if what you're doing is working. If it's not, figure out what you need to change. Husband your capital closely. You don't have a $20 million check from a VC coming. That's what I tell them.
Switching gears slightly, so besides startups, what other type of investment vehicles are you involved with or do you find interesting?
So I've done some stuff more on the private equity side, bigger sort of checks where you're writing $5 to $10 million checks in more established companies, one of which is Hebler. Some of the Hebler folks are here. It's a manufacturer up in Tonawanda. That's sort of, when you look at a wealthy person's capital, you're sort of allocating it to different buckets, and that's one of the buckets you want to put stuff in. All the fundamentals are basically the same as startup investing. It's the same process, to be honest with you, but it's just a different check size. And then I'm also pretty active in real estate investing. For people that basically don't need to tap their principal, investing in real estate is one of the best things that I personally believe you can do. We pay a lot of money to a lot of smart people and tell us, here's what we think the stock market is going to do, or the bond market, or whatever. And everybody's telling us, some sort of balanced portfolio, you're probably going to get like a 6% pre-tax return on your portfolio over the next 10 years. But when you think about that, you've got interest dividends, you're paying tax on that, they sell some stocks, they buy some other ones, you've got capital gains, all this stuff works out, and you end up with like a 3.5% after-tax rate of return, which seems like pretty absurd when your portfolio goes up and down like 15% in 2 weeks' time. It's kind of crazy. The real estate market, there seems to still be some very good value there. We're seeing, so real estate, everything is based on what you call a cap rate. So if I say I'm buying this at a 7 cap, that means if I'm putting $100 down, I'm getting a $7 dividend back. We're buying stuff at 7 caps right now that's pretty high quality stuff. So we're already getting over that threshold that people are telling us we're going to get in the public equities markets. And then on top of that, what's nice about real estate is there's a reason Donald Trump is worth $10 billion. It is like the most tax advantaged asset class there is. So I put down $100, I get $7 back. That's $7 of cash, I may only pay tax on $2 of it. Because just like when you buy a piece of equipment in your business and you can depreciate it over 7 years or whatever it is, you can depreciate your real estate. So the amount of cash coming back to you because of the depreciation that you pay tax on is actually less than the amount of cash that you get. So something like that where you're getting back $7 and you're paying tax on 2 or 3, you'd actually have to buy a bond at like a 10 or 11% interest rate to get the same after-tax return. So we really like that asset class. One of the projects I am involved with is 465 Washington, which is down Mohawk and Huron. It's got the big 1920s flapper picture on it if you're walking up Washington Street. So that's one of the ones that I'm involved with. We're doing some other stuff in self-storage space. Self-storage is a total racket. I mean, it costs like $70 a square foot to build it, and you get like $20 per year per square foot in rent. I mean, it's really pretty wild, the opportunities that are in the real estate space.
$10 million bank account, but I want to be involved in real estate. Like, what advice would you give to me? And if I don't have the hair of Donald Trump to leverage, how can I be involved?
So I have a lot of friends that did a very smart thing, and they bought their first house and it was a double. And they were able to rent out one of the units, paid a lower mortgage. I mean, you're paying way less to have a double than you'd pay in rent. I can guarantee you that. And then had a kid, got married, moved on, or whatever, and they've kept their double as an income property. And that's like the beginning of your retirement portfolio right there. All the same tax advantages apply. You can find 100 things that were definitely related to that rental property to write off on your taxes if you try really hard, I guarantee it. And then, you move on to your house and you're generating cash from your existing duplex rental to pay for your single family house. I have one friend who's now 5 properties deep. So every 2 years, for the mortgage, the FHA mortgage thing, you have to stay in the place for 2 years, not to run afoul of the law. So every 2 years, he buys another duplex and he rents out the one that he has. And he's like continued to do this, and you can do 3% down on the mortgages. So basically with almost zero capital, he has generated a mini Donald Trump real estate empire. So you can get into the real estate space in a way that is actually really beneficial to you because you need a place to live.
Are you a real estate agent as well? It's like a big pitch for real estate.
No, but if you want any ideas, let me know. I'll point you in the right direction. I was a West Side pioneer like 3 years ago. So I bought a house on a couple blocks onto the West Side, and everybody told me, they're like, you are absolutely out of your mind. And for the first year and a half, I thought they were absolutely right. I had 2 major drug busts within 2 blocks of me, and some interesting women living in the house next door, to say the least. But it's really completely turned around. And one of my best investments, ironically, is it was a husband and wife. They bought a lot of property on the West Side, sort of had a management company set up. And they said, okay, we'll raise some money from some outside investors. I said, okay, it sounds like, pretty good deal. They bought, I think it's an 18-unit building. They bought it for $600,000 that they financed. They put $300,000 of cash into it. Last I heard, it's going to appraise for about $1.5 million. So they're going to remortgage it for $1 million and actually have made $100,000 while still having all the income from the property. So it's not impossible to do these things on a smaller sort of scale in Buffalo.
So going back to startup slightly, you had said that you don't think that there's a lack of startup capital in Buffalo. Do you think that there's a lack of financeable startups in Buffalo? And if so, how could that be improved? Basically, is there a lack of people with startups in Buffalo that are worthy of your money?
I don't know how far you want me to get into this on this question. Believe it or not, we do talk about the questions beforehand. We need to create an environment where people have the opportunity to be capitalists. Can I go off on a tangent here? So Bernie Sanders sort of has something right.
This is going to be a big tangent.
I promise I won't talk too much about politics, but he has something right. And that's that the whole system in our country is rigged to benefit big corporations. But he's like a doctor that has the right diagnosis. He's like, you have heart disease, and I'm gonna give you like 3 prescriptions. So I'm gonna give you some free health care, some free education, and a higher minimum wage. And the problem really is that there's not an opportunity for people to be capitalists and to become part of the system. So he's like treating the ailment with prescriptions rather than telling the patient, you have heart disease, so you need to stop eating 5 hamburgers a day and stop smoking and you might get better. So we need to create an environment where small business entrepreneurs are encouraged to grow and thrive. And when you look at the history, the economic history of Buffalo, that's what this whole city was built on. I mean, you had 25-year-old guys in 1900 with an idea that opened a 5 and dime store or a little factory making windshield wipers, or the air conditioner was invented in Buffalo, and they built these huge businesses because the system back then wasn't tilted towards helping all the big companies maintain monopolistic sort of advantages. Actually, I brought one thing. I'm gonna read this. This is pretty cool. The people in the audience here today, hopefully a lot of them are like the future John O'Shea's or you know, Seymour Knox's or whoever. You guys all have the opportunity to build a great business and to create wealth for yourself and to reinvest that wealth into the community. And I thought this was really cogent. It was just in Western New York Heritage magazine. It's a really good magazine. There seems to be some sort of attitude in Buffalo that if you're not 50 years old, you have like nothing of value to add to this community. You know, like the leadership here has been the same forever. And if you look at the boards of directors of these big organizations, it's like the same 10 people on every board. So I don't know that I believe that there's like only 10 talented people in our community. I just don't buy that. So this is a pretty good one. So in 1909, Spencer Kellogg and Sons had just moved into new headquarters at 98 Delaware Avenue on Niagara Street in Buffalo. And they made like linseed oil. I don't really know exactly what that was used for, but apparently it was really important in the turn of the century because they made a lot of money, like Donald Trump. Spencer Kellogg had a compelling sense, unique in the industry, that research, testing, refining, and even altering the chemical composition of vegetable oils and meals it manufactured would improve them and make them more suitable and efficient to serve his customers' needs. And serving these needs was the surest way to expand his business. Because of this belief, he had set aside the entire top floor of his 3-story office building as a research laboratory and looked to hire a full-time director of chemical research. One of the candidates was Dr. Alexander Schwartzman, a Polish immigrant who was well-educated and spoke English fluently, although he had a heavy accent. He was just 31 years old and had only recently been awarded his PhD. Kellogg was polite but direct. Schwartzman was too young and lacked the experience for such an important position. Young Alexander promptly replied, however, that he would grow old and gather experience rather fast. In his own persistent and irrepressible way, he convinced Kellogg to give him a try. It was clearly the most important personnel decision that Kellogg ever made. Schwartzman had an illustrious 49-year-old career with Spencer Kellogg and Sons and became vice president and a member of the board of directors before his retirement in 1958. He was highly respected within the industry. As stated in his obituary, he was considered one of the great scientific minds of his era and renowned here and abroad as a lecturer, humanist, and philanthropist. So that's pretty good. We need like 100 Alexander Schwartzmans, and we need people in business in this community that want to hire the millennial generation because these people have a lot to offer. They are ambitious in an interesting sort of way. They don't think that they should have to work themselves up the ladder. They want to run things like yesterday. But they're hard workers with interesting ideas who I think can add a lot to the economy. And one final point, so Schwartzman was the guy who helped this guy named Bob Rich Sr. perfect the non-dairy whipped cream. So 2 companies in Buffalo, one guy who just said, I will grow old in experience quite fast. And if you give people the opportunity, I truly believe this, to prove themselves, they will.
Interesting. So this is the last question I have for you, and it's what I ask all the Startup Grind speakers. So if Buffalo is to succeed, it needs more of what?
So we need better leadership in this community. You look at a lot of the things that are going on around here and have gone on, and obviously we've been sort of in a huge rut for a long time. I was thinking about this, I came up with a good analogy, and it's the 4 Falls of Buffalo. So most of you probably saw the documentary on ESPN about the Super Bowl teams and 4 Super Bowl losses. So I tried to put this into what has happened to Buffalo. I came up with 4 things. What we now know as a society in America is that having a thriving urban core is very important to economic development. When people are working in close proximity to each other, They come to events like this, they meet other people, they come up with ideas, they make business connections, things organically happen. So the first fall of Buffalo was, we built the 33 and the 198. So we basically made it possible for like everybody that had any sort of money to move out of the city and tore up some beautiful neighborhoods. So I call that the first fall of Buffalo. The second fall of Buffalo, I think, was when they put UB's campus in Amherst. Every other major city in the country has a downtown major campus for their big state university. So that really retarded downtown development for 40, 50 years. I mean, I think it went out there in the mid-60s, early 70s is when they really built it. The third fall of Buffalo was they tore down everything for the Main Place Mall, tore down the Lower West Side, kicked, relatively thriving small businesses out and brought in mega conglomerates, and we see how well that's turned out. So then what's going on right now? Well, we're in the fourth Super Bowl right now, and it's halftime, and we're in the lead. You look at all the things that are going on around here right now, and it is great. But we're in the locker room at halftime, and I think it was Steve Tasker, he said, man, you could tell that team was gassed, right? And there's only so long that you can sustain something like this, which I call it to some degree artificially inseminated. There's tons of money flowing in from all over the place, and to truly create long-term vibrant economic growth, it needs to happen organically. You need to establish a base of people, a base of industries that will organically grow, hire more people, will spawn new ideas, new startups, things like that. So one of the things that I think is a travesty right now is we've just spent, $2 billion to put all of these medical buildings right down the street here. It's a lot of money. As Donald Trump would say, I'm very rich, right? A lot of money. And now ECC is going to go build a medical arts building in Amherst. For the life of me, I cannot figure out how that makes any sense whatsoever, right? The UB Med School is moving from Amherst to downtown. So now you're going to send people that are training for medical professions to Amherst. And it's kind of a snow job because the argument for it is, well, all these kids are going to NCC, and if we build a medical arts building in the ECC campus, then they won't go to NCC. But when you start digging into the statistics, they're going to NCC because the programs that they're going to NCC for are not at ECC. It has nothing to do with medical stuff. And the kids from Buffalo, the inner city, there's no bus routes to get you back from the ECC campus at night back to Buffalo. So the people that this is supposed to be helping, the low-income people that need to go to community college because that's all they can afford and need to work during the day, aren't even going to be able to go there. I don't know how this makes any sense. You've read the articles about ECC. I don't think anybody knows what's going on there. So I think we need to take a time out on that one and take a pause and really ask some hard questions about whether or not that makes any sense. Obviously, the other big thing that you have going on in Buffalo right now is the Solar City thing, which some interesting timing that I'm up here talking about this today. If you've read the newspaper, apparently the people that made the decision to build this thing aren't competent to pay the people that are building it. So I don't think that's a very good sign. But you look at that, and as an investor, if I'm going to invest $750 million, I don't pick one company and say, I am going all in on this company because it is the greatest thing ever, right? So we're talking about building an entrepreneurial ecosystem. What if we had spent $750 million to attract 100 companies to Buffalo. And maybe 70 of those companies would have succeeded to some degree, and 20 of them would have become huge and grown organically. And then you would add the people that run the companies in Buffalo who are the civic leaders. And the people that are going to be working at Solar City are going to be here for like 3 years on like some corporate assignment, and they're going to be gone. They have no interest in sitting down and becoming a part of our community, and that's really important. So the best that I can figure out what's happening here right now is that they didn't know where the money was coming from, so they took a bunch of money from an authority that's supposed to provide housing for students and poor people and gave it to Solar City, which is run by a billionaire from California, whose all 3 of his companies are completely dependent on government subsidies. Right? I mean, the guy would be worth $0 without getting huge bucks from New York State, from Nevada, tax credits, the federal government paying him to launch spy satellites. I don't know, like Bernie Sanders' like TV commercial should be like Elon Musk Exhibit A of the corporate overlords that are stealing all the money. So I don't find that to be smart economic development whatsoever. I did some math. It's like somewhere, if you believe the statistics that the suppliers are going to create 1,500 jobs and Solar City is going to create 1,500 jobs, that's $250,000 per job. I don't know that I believe that suppliers are going to create 1,500 jobs, so like it's somewhere between 250 and 500,000. Can you imagine what we could have done with all that money and how many companies we could have attracted to Buffalo that are employing the people that are coming out of very good universities that we have here? So the best I can tell, this is state money that's coming from everyone in this audience's paychecks being deposited into a bunch of rich people in Buffalo, already rich people that are doing all the work, and a really rich company from California who's only going to be here so long as we keep giving them money. And I don't call that building the ecosystem and developing a sustainable economy that works for the future. So we need to figure out how to build this way rather than grabbing somebody from over here and plopping them down over here and crossing our fingers that it's going to work.
That was very interesting. That's all the questions I had. I feel like I could ask a lot of questions about that, some of those responses, but Charlie.
This is probably a joke question. With everything you just said, what did the mayor and the county executives say when you explained this to them?
Well, the mayor and the county executive, I don't think are interested in listening to us small people who are actually out building businesses. Maybe if I wrote them very large campaign contributions, it would be a different story. I haven't talked to him about it, but clearly what is popular is something that gives you a very good photo op.
What do you think the people in this room can do? This is a better question. People that you're talking to here can do to somehow help things move onto a better plane?
So this is interesting because I said that the issue is leadership. And I think a lot of people feel like they can't stand up and say, no, I disagree with this because the system is so stacked against them. I think everyone here somewhat has actually sort of an obligation to be a leader, an obligation to think for themselves, an obligation to stand up and say, this doesn't make a lot of sense to me. It's hard. There's a small group of people in Buffalo that run a lot of things. And not so much like in the startup community when you have like 4 people and nobody really cares about you from that group, but you sort of start getting involved in some bigger stuff like I have, and you'll get the message eventually that you will do this or there will be repercussions, right? This has happened to me, like, we will try to ruin your career. Oh, great, well, you know what, I don't really care, but, you know, don't put that in an email, it's really dumb. And this sort of stuff happens. I mean, there's one very large organization that I'm aware of in Buffalo, a very prominent organization, where employees are in such fear when they quit that they've been recording their exit interviews on their iPhones, right? So there is a culture here that needs to change. And that requires the grassroots here of the business community to be willing to stand up and say, no, this doesn't make sense, this is wrong, right? We have the same people making the decisions that drove this place into the ground for 30 years, and then the state came in with a bunch of money and basically like handed them like a C-130 firefighting plane to dump water on a small house fire, and like 90% of the water didn't hit the fire. So I don't know what to say other than it's time for a new generation of leadership to emerge in this community. And if you're here and you're working, you have every right to stand up and say this stuff. And I've done it to some degree. It hasn't been pleasant. It hasn't gotten me super far yet. But if enough voices raise up and say, you know, this doesn't make any sense, I think things will start to change.
Thank you. I'm actually I find this whole discussion very interesting. I'm from Budapest, Hungary, and I'm taking my master course at MedDai. It's organizational leadership, actually, what I'm studying. So I'm very interested about this issue of having somehow the leadership should change, you said. So my question is just, would you decide that they have to be able to stand up and say no, something what is wrong, you said? Or what else, how, in what ways the leadership need to be renewed or changed?
Well, I think it's a large degree like a lack of diversity, right? So for the most part, you have a bunch of rich white guys sitting in a room making decisions, and it's like the same rich white guys in every room, and they're not listening to what the people in this room need to be successful. So we talk a lot about diversity in this country, and that involves, you know, I went on and looked at a lot of the boards that make the big decisions in this community, and it's all the same people, and I don't think there's like a single person under the age of 60, right? And they've all been there for 20 years. So we need younger people, people with different perspectives, to have the opportunity to have input on these things that are going on in our community, because ultimately, A, it's our community, so we want it to be successful, and B, we're all funding this stuff. So we should have a bigger say in where the money's going.
I love when you hear what you're saying. I'm just curious, have you done any research on, give us a couple of examples of where government has actually played a successful role in developing entrepreneurship?
That's a hard question to answer. It's an indirect thing. Government can provide some basic services, for lack of a better word, that allow entrepreneurs to thrive. For example, we need an awesome education system, and government has a very important role to play in our education system. You look at the areas that have really succeeded, like Silicon Valley or Austin. You know, New York State actually came up with one good idea. I'll give them credit for the Startup New York program, right? Where they said, okay, nobody's gonna move their business to Buffalo because who in their right mind wants to pay 9% income taxes? So they said for the first 10 years, you can come here, you won't pay personal income taxes, you won't pay corporate income taxes. Great idea, right? Well, then they put like all these handcuffs on it where you have to be affiliated with the university and you have to be in a building that we approve. And then they went and spent $250 million, last I heard, advertising this. right? Well, you could have like hired some people and paid their salaries or whatever and had them fly around the country and say, if we're gonna spend $250 million, we might as well just give it to the companies, right? So we spent all this money on advertising, and I have no idea what the stats are. Every time you read in the newspaper, they say this company has pledged to create this many jobs, and like pledged is like a joke. I mean, I know some of the companies that have pledged to create 60 jobs.
Three to 5 years in before they'd be held accountable.
Well, there is no accountability. There's no accountability.
In the third, fourth, and fifth year there is. In startup New York.
You're correct, sure. Okay, so they're not being held accountable, and I know a lot of companies that said in the newspaper they're going to create 60 jobs, and they have like 3 people, and that was 2 years ago.
Okay. Well, if you notice, a lot of startup New York companies that are entering their third year now are creating positions. There's a lot more visibility in the actual employment world on that. But I don't disagree with you on that. The example you brought up, or you were going to bring up Denver, Silicon Valley. What role did government play in their ecosystem developing?
So out there, what really happened was the governments placed a huge emphasis on education, and to a large degree it was private institutions too, but all of that was facilitated by the government. They've had some in the Bay Area, they've had to really build a really good infrastructure to support what has happened. The government has a role in building the infrastructure.
And did they do it prior to or while it was happening?
I think it kind of snowballed on itself. I'm not an expert
Okay.
on
No,
this.
because what you're talking about is, I don't know if you're familiar with Michael Porter. This is Michael Porter's diamond model. Especially the diamond model talks about international competition, and it's the same role the government plays outside. The diamond model, called the diamond because there's 4 parts to it. The government's role is outside of the diamond. It's not part of the diamond. And that's why I was wondering if you're aware of an alternative to doing it that way. It seems to me that we're kind of talking the same issue in different terms, but the idea is entrepreneurship has to take the lead. Government will then partner with it, and because of the power that the entrepreneur ecosystem creates, that once the success level comes in, is the control on the role the government plays, keeping government from making the rules. And so we have to build it up from the private enterprise side, instead of expecting the government is going to put the money in and do it in the right way, because we know, and we have a 100, 200-year tradition in the United States of government investment being done incorrectly. It's not their strong
agree
suit.
more there. So
I want to be respectful of everybody's time, so Kevin, if you can stick around.
I'll sit here and answer questions as long as people want me to answer questions. I won't feel bad if you leave either. So
I don't know. Yeah. I think, well, Kevin can stick around. I just want to so thank you for the financial advice. I have some financial advice that my grandfather gave me, and that was to play scratch-off lotto tickets. So, in case, and if there's a winner, we're all splitting it. So make sure you pay attention. Look out for
you're
your email.
helping pay for Solar City through the lottery program here. So thanks.
Keep an eye on your emails for the pitch feedback session. That will be the last week of March. And thank you so much for coming. You're welcome to any leftover pizza and beer. Have a good night. Thank you. Bye.